QuickBooks Online 2021, correct a sales receipt. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our Get Great Guitars practice file. We're going to talk about adjusting a sales receipt. So first we're going to locate that sales receipt, which we could do a couple different ways. One, you could go into the Sales tab on the left-hand side, which is basically the Customer Center, the Customers tab up top. We're going to scroll down to the customer that will be applicable, that being Jones Guitars and the job 3005. I'm going to go into job 3005, and there's the sales receipt that we need to adjust. Now note that although we're going to go ahead and adjust it within QuickBooks, which QuickBooks gives you a great flexibility in order to do, you want to be careful about that and note that the better or more accounting specific way to do it, or the better way to do it for an accounting system, would be not to delete anything necessarily, but to void it possibly. So you might want to go over here and say void the transaction, and then enter another transaction with the correct amount, and that kind of saves your audit trail rather than going back in and adjusting something. However, if you've miskeyed something in there in QuickBooks and you just did it, say a sales receipt or something like that, you of course do have the ability within QuickBooks to go back in there and simply adjust the sales receipt. Just be careful to do that. Note that in a full service accounting system, you probably would be locked out of actually deleting things like a sales receipt, because we want to preserve the accounting trail. And if it were something that was in a prior period that had already been recorded and possibly been tied to, say, a received payment or a deposit that's been reconciled or something like that, then we want to be very careful of it at that point. But we're going to do it here, and I'm going to get into it another way just so we could see another way that we could find this transaction. The other way I would think about finding this transaction is going, duplicating this tab, right click on the tab, duplicate. I'm going to open up the reports and then drill down to the data. This is probably what I would think of, what I would do most often to actually locate a transaction. I'd say, well, it's a sales receipt. Let's go from the endpoint and kind of audit back down or drill back down onto the data. So I would go into the reports. The report I would most commonly go into would be the trial balance, not the trail balance, but the trial balance. Going on into the trial balance, range changing it up top, ending at 12/31/21, and running that report. I'll close up the hamburger, hold down control, scroll up just a bit, and it's on the sales receipt. So that's going to affect basically an income type of account, and the other side will typically go to undeposited funds. The income account might be the more straightforward account to be looking at. It was a service item, so we're looking for this service income. I would go into there and look for the sales receipt that we're looking for, which would be this item. That's the sales receipt, and then drill down on that, drill down on it further, and that'll take us to the actual sales receipt. Now, when might we determine or know that this sales receipt had a problem with it? We might have miskeyed it and basically looked at it when we were going to simply make the deposit, possibly, and then match up what we had in our sales register and the deposits. So for example, if this was cash that we're now taking to the bank at the end of the day, and we said, oh, we should have had a sale that was greater than 140, our cash count would not sign out or add up to the sales receipt count, and we would basically know it at that point in time. If we deposited the wrong amount into the checking account, and it was different than what was recorded on the sales receipt, so you're imagining you're at the check register, we got, say, cash, and we're going to say cash we received was for $1,400, which I know is a large example at this case, but that's what, and then we recorded it as 140. Then if you put that cash into undeposited funds, and then you're matching up your cash receipts to your sales register at the end of the day, and then taking that cash to the bank, which would be a common internal control, that's when you would kind of see that error, and you go, oh, this one sale looks like it was off by that amount, or you record like an over and short type of account to account for the difference between the cash you have on hand and the sales receipt. Or if you deposited this, say, into the bank and it was for the wrong amount, it should have been 1,400, and you miskeyed it to 140, then we would find that when we do the bank reconciliation, because we'd have a difference in the deposit than we have in our sales receipt. So those are some areas where that might come up. I'm going to go ahead and change this now. This quantity, I'm going to change this to 10. So now the amount should be the 1,400 that we're going to then apply out. And then I'm just going to say save and close this. And that's how easy it is to adjust something in most documents. You can adjust really easily. It's scary easy that you can adjust them, because again, if you're not careful with going back and adjusting things, you could cause a problem. It could cause you problems, especially when you're talking about something in prior periods. But again, it's nice to be able to do from time to time. It is kind of the easiest thing to do oftentimes. In any case, here's where we stand in terms of our trial balance at this point. So now we have adjusted that amount, and that amount will then have an impact on the undeposited funds here. Undeposited funds now at that 1,400, as well as scrolling back up the income account. So the income account down here on the service income being that 1,400. And I'm going to go back to the trial balance. So here's where we stand in terms of the TB, the trusty TB, the trial balance.